Welcome to Illuminati Silver. We tell the truth about silver. Today is Saturday, the 11th of July 2020, and we're publishing our gold and silver weekly update for the week ending the 10th of July. Now, yesterday we published a video entitled $2,000 Gold, Is It Coming in 2020? And on Wednesday, one entitled Gold Sales Past $1,800 and Silver $18.50. Now, if you haven't had an opportunity to listen to these, we've placed a link in the description box below. Well, gold rose $21 last week from $1,778 to $1,799, having hit a high of $1,818 and a low of $1,770, a rise for the week of 1.2%. Interestingly, for a few days, gold actually stayed above 1,800, but dipped just prior to the end of trading on Friday. Now, in sterling terms, gold finished the week at £1,426. That's actually down £1, obviously due to the strength of sterling versus the dollar. And in euros, it closed at €1,593. That's up €12. Silver rose 61 cents from $18.14 to $18.75, having hit a high of $19.07 and a low of $17.96, a rise for the week of 3.4%, and having moved through that very strong psychologically resistive barrier of $19, albeit not for long. Now, in sterling terms, it closed at £14.86. That's up 36 pence. And in euros, it closed at €16.59. That's up 0.48 euros. The gold to silver ratio fell this week again from 97.6 to 1 to 95.9 to 1. Now, the Dow Jones closed on Friday at 26,075, up 369 points on the day and up 248 points on the week. The S&P 500 closed at 3,185, up 32 points on the day and up 55 points on the week. And the Nasdaq closed at 10,617, up 69 points on the day and up 410 points on the week. Now, we have to admit, during the week there was quite a nasty fall in equity markets, but they've managed to recover during the course of the remainder of that week. Now, Brent crude closed at $43.24. Now, that's up 44 cents. And WTI crude closed at $40.55, and that's up 23 cents. Mainly the effect of the devaluation of the dollar. Not because of any significant move either way in terms of production, supply or demand for oil. Now, the dollar index stands at 96.65, and that's down 0.52 points on the week. Again, it did sort of rest above 97, but towards the end fell back. Now, we concluded last week's update with the following words, quote, "So next week we can see gold holding up and trying to advance further. Silver doing the same but within the range we specified, and geopolitics and COVID-19 likely to play the prominent role in any major price movements should they occur. The most likely outcome for this coming week for silver is a degree of consolidation, now with the upper end extended a little to the $19 level, so we can foresee silver moving between $17.50 to $18.50, with 17 being a floor and 19 being a strong level of resistance." Unquote. Well, with regards to gold, it actually hit an 8-year high on Wednesday, and apart from an opening dip, remained in positive territory all week. From a technical point of view, support rests near to the 10-day moving average at $1,786, with further backup at the 50-day moving average of $1,738. The next major upside resistance level, very major, is the August 2011 highs at 1921. So we're still roughly $121 off that. But gold does have to pass through various other resistance points on the way. and not least being the psychologically resistive points of $1,850 and $1,900. Should it exceed 19, then it will almost certainly test the 1921. Now, short-term momentum is negative and medium-term momentum is positive. The fast stochastic suggests a short-term correction lower. Now, in yesterday's video, we addressed the possibility of $2,000 gold, and there's no doubt that some serious names are predicting it, Goldman Sachs being one, for example. The issue for them, though, and for the others, is when this is likely to occur. But there is consensus amongst some of the larger bullion banks, dealers and traders, is that it will be within the next 12 months. Now, moving over to silver, like gold, it opened the week slightly down and then rose, but actually peaked on Thursday as opposed to Wednesday, which it did for gold. What was interesting, though, was the peak actually rose above our predictive high of $19, though it did come scurrying back down again pretty quickly. Now, that said, it did also remain above the 1850 level, and this is relevant and important. Now, in tomorrow's video, we shall talk specifically about silver. But it's worth noting today, at least, that investment demand for silver has increased by 10% in the first 6 months of this year, thereby suggesting that it is now at last making up for any reduction in industrial demand. Now, technically, there is support at the 1850 level, $18.50, and more solid support at $18, which is near the 20 EMA. Resistance at $19 is clear, and further resistance at $19.50. Now, some analysts are stating we could indeed see $20 silver even as soon as this month. Again, we shall comment on this further tomorrow. Now, last week's economic data showed higher services PMI and non-manufacturing index results for June. Initial jobless claims at 1.31 million compared with the previous week's 1.41 million, and a producer price index for June down 0.2% compared with a positive 0.4% in May. So you can see inflation is really not an issue for the economy, thereby potentially causing central banks to continue even further stimulus in order to get some form of inflation back into the marketplace. Well, this coming week we have some interesting data announcements, so let's take a look at what's on the agenda. On Monday we have the federal budget for June. Tuesday, consumer price index for June and core CPI for June. That's an important day. Wednesday, import price index for June. Industrial production for June, capacity utilization for June, and the beige book is announced. So again, important day. And Thursday, weekly jobless claims, retail sales for June, that'll be an interesting one, the Philly Fed index for July, and the NAHB Home Builders Index for July. So again, reasonable amount of data to take note of. And on Friday, housing starts and building permits for June and the Consumer Sentiment Index for July. So we'll see the retail sales for June on Thursday and perhaps note the Consumer Sentiment Index for July, which may, not guaranteed, give us an indication of what the figures are likely to be this month. So watch out particularly for Tuesday, Wednesday and Thursday. Now, going briefly back to last week, we quoted, "The level of banking stimulus is going to ensure that precious metal prices will indeed be underpinned. This stimulus will also, for a short time, buoy equity markets. But these markets now consistently need good news announcements to maintain their current level. This may be achieved, for example, with an infrastructure spend announcement or even more stimulus being pumped into the economy. However, we suspect that if and when central banks in the US and UK begin to call for and actually introduce negative rates, we're of the opinion we shall see a reversal, as then traders will know that the economic situation is far worse than expected." Unquote. Now, we still actually hold this position, and have during the course of the week produced some videos actually touching on this subject. We also wish today to reiterate our concerns over COVID-19 and how a number of states are showing increasing infections and now an uptick in deaths again, because the number of deaths on a daily basis had started to fall. Now, Dr. Fauci is even quoting that daily infections could rise as high as 100,000. And this is not out of the park when one bears in mind that on Thursday the infection rate was 60,000 and then yesterday as high as 70,000. Now, unfortunately, all of this is positive for gold and silver prices. Not unfortunate to have positive gold and silver prices, but unfortunate that this is really the reason for higher gold and silver prices, as it certainly undermines the US dollar as more and more of them are printed. Now, of course, those who invest in gold and silver in other countries, such as the UK, for example, will have seen a weakening in the gold price because sterling actually strengthened against the dollar. But of course, this can be counterbalanced by the price rising faster than the level of currency depreciation. So what do we foresee for next week? Well, frankly, more of the same, but again in relatively more positive territory. Maybe a slight pullback early in the week, but gold is now firmly in the 1750 to 1850 camp. And silver has stretched its limits, so as far as we're concerned, it's in the $18 camp on the low end and $19.25 camp on the upper end. What is exciting, though, but again for all the wrong reasons, is the potential for instability should President Trump continue to fall in the polls. We know this election in November is crucial to protect him personally from all sorts of legal action and, according to some, potential incarceration. And he will, in our opinion, literally do anything to ensure his election prospects. This will certainly cause a high degree of uncertainty and instability. And frankly, based on precedent, during such times, investors flock to safe haven assets such as gold and silver. What do you think about our analysis? Where do you think gold and silver prices are going to move this week and throughout the rest of the month? Do share your thoughts. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.